Roth conversions can be a great way to limit your long-term tax liability. However, the analysis and creating a plan can be pretty complex. We have a lot of in-depth videos on how we create these plans for clients that you should look at if you're interested in learning more. We'll link to these resources below. However, we also receive a lot of basic questions on Roth conversions that we can answer pretty quickly that don't depend on your individual financial situation. One of the most common questions we get about Roth conversions are if there are age limits to be eligible to do a Roth conversion. And thankfully there are not. Whether you're 18 years old or 100 years old, you can do a Roth conversion. There's one caveat here: if you're under age 59 and a half and use your IRA to pay the tax bill for a Roth conversion, you may be assessed a penalty just on the portion that is withheld for taxes. The entire Roth conversion isn't penalized, but that's something you should be aware of if you're under age 59 and a half. Otherwise, there's no restrictions at all based on your age. There's also a common question we get about Roth conversions and income, and whether or not you have to have income below a certain limit to be eligible to do a Roth conversion. And that's not the case. Regardless of your income, you're able to do a Roth conversion. There's some confusion here because to make Roth IRA contributions, you have to be below a certain amount of income, but that's different. For Roth conversions, your income does not matter at all. People also ask about the deadline for doing Roth conversions. You have until December 31st to do a Roth conversion and have it count towards that year's taxes. You cannot do a conversion in February and have it apply towards the prior year taxes. This is again different than just regular Roth IRA contributions, where you can make those sometimes as late as April and have them count towards the prior year. Finally, a lot of retirees want to know if a Roth conversion can satisfy their RMD, or required minimum distribution, each year. And unfortunately, no, Roth conversions do not count towards that. But know that taxes that are withheld as doing Roth conversions can count towards your RMD. So just for example, if you have a $20,000 RMD this year, you can make a $20,000 distribution, withhold 100% of it towards taxes, and then do a Roth conversion that results in a $20,000 tax bill, and your RMD is going to be satisfied. This can be a great option for retirees that don't need their RMDs for everyday living expenses and are looking at executing a Roth conversion strategy. With these basic questions out of the way, you might be wondering if a Roth conversion strategy is right for you. Know that this is something we do for our clients every year at Arnold & Moat Wealth Management, so if you're interested in learning more, please reach out.